Good morning. We will pay attention to bad debts and bad debts recovered today. Received R300 as a final payment of 40 cents in the rand. The total debt is 100%. 40% of the debt is received and 60% of the debt will be written off. The amount given is the amount received, so that 40% equals R300. If I want to calculate the bad debts, the percentage that I want to calculate 60 divided by the percentage given 40, and that will give us R450. Receive 40 cents in the rand as a final payment of a debt of 300. So now the debt is given and the total debt is 100%, and that equals 300 rand. If we want to calculate the bad debts, the one that we want 60 over the one that we know 100 times 300, and that will give us 150 rand. So depending on the calculation that you do, that these two figures differ from 180 to 450. It is therefore very important to determine whether the amount received or the debt is given. Marnus Traders decided on 31st of March to write off the debt of 400 of Marley Steyn as bad debts. The debtors control had a balance of 400. The debt is written off, so debtors control is credited to decrease the asset on the credit side. And the expense bad debt is created to increase expenses on the debit side with 400. On 15 May, Marnus Traders received a final payment of 50 cents in the rand from the insolvent estate. So now some of the money is paid back. So we have to calculate what is the total amount that we receive. The total debt equals 100% times 400. If we want to calculate the amount received, it will be 25%, and that will give me 100 rand. The bank is debited to increase the money in the bank, and the income is created to increase income on the credit side with the amount received. After we wrote off the debt of a debtor, you can never write in the account of the debtor again, because his account is closed off and they don't use that account again. If we write this amount on the credit side of the debtor, it means that we are actually creating a creditor, and then we have to pay the money back to them. So after the debt was written off, you will never write in the account of that debtor again. Bad debts is debited to increase expenses, and expenses will decrease the profit. Debtors control is credited to decrease the assets. We will record this in the general journal, and we will use a journal narration. The bank account is debited to increase assets with 100. Bad debts recovered is credited because income increases equity on the credit side. We will issue a receipt and record this entry in the cash receipts journal. Zell is declared insolvent. Marnus Traders received a final payment of 35 cents in the rand in settlement of a debt of 700. So they give you the total debt. Total debt is 100%, and that equals the 700 rand. The amount received is 35%, and the bad debts will be 65. If we want to determine how much money we receive, the percentage that I want, 35, divided by the percentage that I know, 100, times 700, and that will give me 245. The bad debts will be the one that we want, 65, divided by the one that we know, 100, and that will give me 455. The debtors control had a balance of 700. We will credit the debtors control with 245, and the bank will increase with the additional money of 245. We will also decrease the debtors with the amount written off 455 so that this account can be closed, and we will debit bad debts with 455. Bank increases on the debit side, so assets increase. Debtors control on the credit side will decrease assets. A receipt is issued as proof of payment. Bad debts is debited to increase expenses. Expenses decrease the profit. Debtors control will decrease my assets, and when we write off bad debts, we will record it in the general journal, and we will use a journal narration as source document. Zelle is declared insolvent. Marnus Traders received 700 as a final payment of 35 cents in the rand. So the amount received is now given. The total debt is 100%. The amount received is 35% of the debt, and bad debt is 65% of the total debt. The amount received is given, so 35% equals 700. If we want to calculate the bad debts, the one that we want, 65, divided by the one that we know, 35, times 700, and that will give me 1,300. The debtors have a debit balance of 2,000. You will decrease the debtors on the credit side with the amount received and the bad debt so that this account can be closed off. Bank will increase with the 700 that's deposited, and bad debts expense will increase with 1,300. The bank increases assets on the debit side with 700, and debtors control decreases assets on the credit side with 700. We will issue a receipt and record the money received in the cash receipts journal. Bad debts is an expense that will decrease the profits with 1,300. Debtors control is credited to decrease the assets with 1,300. Bad debts is recorded in the general journal, and a journal narration is used. When we write off bad debts, we have to determine whether the amount received or the outstanding debt is provided to ensure that you use the correct calculation. Reduce the debtors with the bad debts and with the amount received to decrease the asset. Debit bad debts to increase the expense. Bad debts recovered can never be written in the account of the debtor because the account was closed when the bad debts were written off. Income must be credited so that the income will increase profits, and we will increase bad debts recovered on the credit side.